Hello everyone, Professor Christensen here. In this video, we're going to have a quick overview of financial statement analysis. Not a lot of details, just kind of give you a roadmap as to where we're going and give you some context for your studies. All right, so our learning objectives for this chapter are: we want to explain how financial statements are used to analyze a business. We're going to look at both horizontal and vertical analysis of financial statements, and then we're going to look at computing ratios. So, when you are analyzing a business, number one rule, comparisons are needed. For example, if I told you a company had net income of $100,000, how do you know if that's a good number or not, right? So there are a few different ways we can do that. One is year to year. So, for example, if our company that made $100,000 in net income this year, last year made $40,000 in net income, we'd say, wow, okay, well, their net income went up a lot compared to last year. Then, of course, you want to look at why. We could compare with competitors. So, for example, if you were looking at, say, Home Depot, maybe you want to compare them to Lowe's, right? Because they're similar kinds of stores. Or you can look at industry averages, and that would be like, instead of comparing Home Depot to Lowe's, you would say, well, what about all of the home improvement and hardware retail kinds of companies, right? How is Home Depot doing compared to all of them? So number one rule, if you're trying to decide if something is good or not, make a comparison, all right? A number all by itself is really not helpful. In a few cases it is, but where we have some, rules of thumb, but for the most part, compare it with something, all right? Okay, so we use three tools in analyzing businesses. We use horizontal analysis, vertical analysis, and ratio analysis. So let's take a look at each of those, starting with horizontal analysis. So there are two types of horizontal analysis. One is dollar and percentage changes, and that looks generally at 2 years, so 1 year compared to another year. And then trend analysis, which compares maybe 5 years, a longer period of time. So here's an example of horizontal analysis. So this is a little tiny piece of a balance sheet. It might look familiar to you. This is called a comparative balance sheet because it has this year's numbers, the most current year, and then it has last year's numbers. And so this piece here is our horizontal analysis piece of it. What this is showing is, well, our cash went up by $20,000 this year in dollars, and as a percentage, it was 20%. And our accounts receivable went up by $15,000. So how did we get these numbers? Well, the dollar change is the easy part, right? Last year it was $100,000, and this year it's $120,000, so it went up by $20,000. Then you divide that by the earlier number that we sometimes call a base year. So here we divided the 20,000 by the 100,000 to get our percentage change. And here our accounts receivable went up by 15,000. And so that's our increase in dollars. And then we take the 15,000 divided by the 30,000, and that's how we got 50%. Okay. There is a whole separate video on horizontal analysis that you can take a look at if you want a little bit more detail on this. Okay. So now let's take a quick look at what is horizontal analysis when we're talking about trend analysis. So remember what I mentioned. I mentioned that trend analysis is over a longer period of time. So here we're going to look at a trend of sales for 5 years. So year one here is always going to be the base year, and the base year is going to be 100%. And what trend analysis does is, instead of finding a dollar or a percentage, what it's doing is taking every year after year one as a percentage of year one, or our base year. So here in year two, we're taking the $270,000 and we're dividing it back by the $250,000, and that's giving us 108%. All right. And in year 3, we take the year 3 revenue again back by year 1. All right. So every one of these numbers is divided back by year 1. Feel free at any point to pause this and, play with the numbers a little bit. Make sure you understand them. Again, there is a video about trend analysis that will help you if you need a little more detail. So the trend is showing you all of the later years in terms of the base year. So we're saying our sales in year 4 are 120% of what sales were back in year 1. Okay. Now, let's take a look at vertical analysis. So vertical analysis works differently depending on whether you're looking at a balance sheet or an income statement. So let's look at both of them. This is the top half of our balance sheet, a simple balance sheet. It shows our assets. And we're going to look at the vertical analysis. Now, vertical, remember, is up and down. So these are all of the percentages that each of those items represent as a percentage of total assets. Sometimes these are called common size statements or common size balance sheet. That would be or instead of having dollars, all of the numbers are in percentage. Now, so each of these numbers was divided by total assets. Total assets here are $345,000. So for example, the cash, we took the $120,000 and we divided it by 345.5 to get that 34.7. And what this is saying is that our cash represents basically 35% of all of our assets, right? And then our accounts receivable, you take the 45,000 accounts receivable and you divide it by the total assets, again, 345,000. So each of these items was divided by the total assets to get the number, and they should add up to 100%. Sometimes you might be off a little bit because of rounding, all right? But it should be pretty close to 100%. Now let's take a look at vertical analysis of the income statement. Again, we're going to have a common size income statement. Now with the income statement, of course, we don't have assets on the income statement. We have revenues and expenses, remember? So on our income statement, each item is a percentage of net sales. So we took cost of goods sold, the $45,000, and we divided it by the $100,000 net sales. Same thing with gross profit. We took our gross profit of $40,000 and we divided it by the $120,000 to get these numbers. Okay? And so what this tells us is what percentage each of these numbers is as a percentage of net sales. Again, there's a vertical analysis video that you can watch if you would like more detail on this. All right, finally is ratio analysis. Now we're going to look at a whole bunch of ratios, and I try to keep these overview videos to 10 minutes or less. And so we're not going to look at all of the videos, but I'm sorry, all of the ratios. So the ratios are going to tell things about the company, like, is the company able to pay its current liabilities? Now, how do you pay current liabilities? Well, you use current assets, right? You need cash, or you need something that's going to be turning to cash soon in order to pay your current liabilities. So you might look at something like a current ratio, which is your current assets divided by your current liabilities. Then you're going to take a look at the ability to sell merchandise and collect receivables. So you'll look at things like an inventory turnover, which tells you how fast you're selling your inventory, and a receivable turnover, which says how fast are you collecting your receivables, right? The faster you collect your receivables, the quicker you get your cash, and you can use that cash again, right? You're going to look at the ability to pay long-term debt. So you'll look at things like what is your makeup of long-term debt and equity, and how does that compare to your assets? Then you're going to look at profitability. So that's mostly focusing on your income statement, right? And actually, we just looked at, for example, gross profit as a percentage of sales, or your gross profit percentage, and that is, or gross profit ratio, that is a profitability measure, all right? And so we'll look at some others of those. And then finally, you'll look at some ratios that look at stock as an investment. So maybe things like how much dividends is the company? How much is the company paying in dividends each year compared to its stock price? All right. Remember always to compare. All right. Again, we have a few benchmarks, but for the most part, make sure you're comparing either to a prior year or to another company or to industry averages. Okay. So that's all I have for today. Now you should be ready to go on and work on your chapter materials. Happy studying!